Beginner's Guide to ETFs. We're going to use the website justetf.com. So ETF stands for Exchange Traded Fund. So a fund means that it's a collection of assets. So we're going to look at equity ETFs in this video. And it's exchange, that means it's on a stock exchange, so it's listed and it's traded every day according to the opening hours of the stock exchange. So generally ETFs are very cost effective. They're generally passive with low fees. They will track some sort of index, for example, the MSCI World Index, and that has around 1,600 companies from all over the world. And you don't pay any stamp duty due to the nature of the fund and where they're located. So it's generally cheaper than an investment trust. And then also, unlike an open-ended investment company, you trade it live, so you don't have to wait a day or two to find out what price you got. So the aim of the ETF is to track an index, and you can measure how effectively it does that through a tracking error that you can generally find on the fact sheet of the exchange traded fund. So other examples of ETFs would be ones that cover the NASDAQ 100, the S&P 500, the FTSE 100, or for Europe, it might be the Euro Stoxx 50. So a range of very liquid and very marketable indexes so you can get quick and easy exposure to a group of assets. So ETFs have a naming convention. So it works like, first of all, you get the issuer. So a company called Xtrackers is the issuer of this ETF. Then you've got the index that it tracks, in this case, the S&P 500. Then it says UCITS, so it just means that it meets the European regulatory requirements. The 2 is like the class of the share. The C means that it is an accumulating ETF, so it wraps up the dividends within the fund. And then you've got the currency details here, and this is GBP, and it's hedged against, in this case, the US dollar because it's a US index. So as a general rule for ETFs, if you're in an accumulation phase in your life, saving up for retirement, then you want an accumulation ETF so that the dividends are automatically reinvested for you and it's as passive as you can get. You don't have to do anything. If you are retired, then you might want a distributing ETF that will pay you some income. If you're new to ETF investing, then really you should go for ETFs that are quoted in GBP. It doesn't matter what the underlying currency is because that will be associated with the index that's being tracked. You don't necessarily need a GBP hedged ETF because the dollar is quite a strong currency, and over the long term, you're probably better off with an unhedged ETF. A lot of ETFs are based in Ireland, but don't worry about this. That's just for tax purposes. But you should be worried about anything that is short a market because that's quite risky. Then also anything that is leveraged, so it has like a 2 times or 3 times in its name, because you don't really want the extra leverage when you're starting out. Okay, so now let's click on the ETF screener and try and find some decent ETFs. So we've got all the information we need for screening over here on the left-hand side. So initially we're going to select equity. And then within equity, we've got regions like Europe, we've got countries like US, we've got sectors that are things like healthcare, financials, technology. Then we've got equity strategies. These are generally factor ETFs, looking at things like quality, low volatility, momentum, maybe ESG as well. And then finally, we've got thematic ETFs that cover a wide range of quite narrow driving forces of the global economy, but these can kind of come and go. They're a bit faddy, so you've got to be a little bit careful with these, but we'll cover them in a bit more depth later on. Okay, so next we can select the index we want to track, and there's 808 of them. If you're interested, we can select the sustainability, so whether it's looking at ESG or not. We can select the age the ETF has been in existence, and there's loads of innovation within ETFs, so you can see that there's only 662 out of nearly 2,000 that have been around for more than 5 years. Now we've got the use of profit, so whether it accumulates or whether it distributes a dividend or not. And you can also look at the dividend yield, the size of the fund, so it's saying larger is greater than 100 million. So maybe if you're quite cautious, you want something with a longer track record, you might select something that's got more than 100 million pounds of assets under management. So this one's quite important, the replication method. So for the larger, more liquid indexes like the S&P 500 and the FTSE 100, you will get, and you should insist on, full replication. So you're buying all of the 500 shares in the S&P 500. For small caps and maybe some emerging markets, you might find you have to use a sampling methodology to get hold of the assets you want, because some of the smaller companies are quite illiquid, difficult to buy into, which will either push up your costs or push up the price of the assets that you're trying to buy, in which case sampling is kind of acceptable. But what's not that acceptable is something that is swap based, and this means that you don't actually own the underlying shares. Instead, you've entered into a contract with a third party, probably a bank, that is ultimately paying the return on the underlying index. And the problem is that you don't often know who the counterparty is. The counterparty might change, they might go bankrupt or just give up on the idea of the swap contract. And although there's a very low probability of this occurring, you just don't need the hassle and don't need the risk. We can also look at the provider of the ETF, the largest ones being iShares and Vanguard. Also Legal & General are quite popular in the UK. There are a few rather obscure names that you might need to be a little bit careful of, but generally these companies are quite well established. So you can also select things like where the fund is ultimately based. So Bulgaria, anyone, maybe not, whether it's hedged or not, and what currency it's hedged into, and whether it's an active ETF, whether it's a short and leveraged ETF, so you can know maybe whether to avoid these. So here I've selected accumulating, larger than 100 million fund size, full replication ETFs. I've got 224. I can select the columns that I'm interested in here, and then what I like to initially sift on is the risk and return over 5 years. So at the top we've got the information technology sector, so that's kind of understandable. We've got a thematic ETF in terms of e-commerce logistics, which is quite interesting. We've got semiconductors, we've got a battery value chain, artificial intelligence, again quite interesting, NASDAQ 100, USA socially responsible. So it's quite interesting to have a look, see what's going on. And then here we've got some world ETFs as well. If we go back to the Just ETF homepage, we can click show more articles and then pick how to choose a global ETF, because a global ETF is really a potential backbone of an investment strategy for retirement, and it's got all kinds of things here that you can read up on, where it's guiding you through the best way to look for an ETF and filter out and get the right criteria for you. If you want to learn about the top ETFs, just click on this button here, click on learn more, and then it's pulling up actually the top performing indices for 2023. So quite a few of them are based around blockchain, so they're going to be quite volatile. They're going to come into favor, out of favor. Some around semiconductors. There have been some semiconductor shortages, and maybe now they're more available, and Nvidia is doing very well, so they're potentially doing okay. Also got things like cybersecurity, uranium that I've talked about in the past, and things like artificial intelligence. So here's another ETF fact sheet. This one is iShares Core MSCI World, and I do like the iShares fact sheets. They give you lots of interesting information, including things like the PE ratio, which here is 19.25, which is a bit punchy really. Then also it's got the calendar year performance, which I think enables you to make a bit more sense of what's going on, and it's got the performance of the fund versus the benchmark. The difference between the two would be the tracking error, and here actually the tracking error is positive because this fund loans out some of the shares to short sellers and makes income from that, passes that on to the holders of the ETF that kind of outweighs the charges of that ETF, the 0.2% that it charges every year. So because of that, it's actually able to give very good replication of the index, and that's why I like this potential ETF. Another useful feature about iShares ETFs is that you can go to the iShares website and you can actually download all the holdings in the ETF. So you've got full transparency of what's going on, and that's sometimes useful, particularly with maybe the more thematic ETFs or the sector or country ETFs. You can get a better handle of exactly what it's investing in. If you're interested in a thematic ETF such as this LNG artificial intelligence, you can come to its page on justetf.com, scroll down, find out all the information about it, particularly looking at the top 10 holdings, where it's interesting that Microsoft is number 3 and Alphabet is also in there as well, number 6. So what you'd want to do is to just put the index name, this Robo Global Artificial Intelligence Index, into Google, and then you'll find out the index methodology, and that will help to understand what's going on with the index and the ETF and what the risks are, the opportunities, how it's selecting, how it's getting to maybe more of a purer play around that theme. And the thematic ETFs often select more small to mid cap holdings that follow the theme, so they can be a bit more volatile than you might think, and possibly more volatile than the NASDAQ 100. So just be aware of that when you're selecting thematic ETFs. JustETF.com is a free website. There's loads of great articles. Here's one about a core and satellite strategy and how you can potentially implement that. So you can have a global ETF in the core, then country ETFs around it, or sectors, or factors like quality, or commodities like a broad-based commodity fund, or gold, or you could even have bonds as well. Hopefully this guide has been useful for you. Let me know what you think in the comments. And up next, here are a couple of ETF videos that I think might be interesting for you.